Hello, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So feel welcome. Today, we'll be looking at what we are expecting in the economic calendar today. And at the same time, we'll look at the key price levels, try to understand the major trends as well as key price levels. So there's a good question here already, and thank you for the question, Kweli. On the Forex Factory, how am I supposed to understand it better if I find it a bit challenging sometimes? I will be looking into that. So I'll do a quick overview as we focus on the news that you're expecting for the day. So without wasting time, here is the Forex Factory economic calendar. And as you can see, Monday was relatively a quiet day without bank holidays since it was Easter Monday. Then Tuesday, we didn't have a lot happening in the markets besides the Chinese CPI, which came in at 0.7%. Then today being Wednesday, we already started with some fireworks from 3 speeches by FOMC members. So we had a speech from FOMC member Goolsbee, Haka, as well as Kashkari. So they managed to issue different speeches. Some of them were conflicting each other. So the market is still torn in between whether the Fed will maintain interest rates at the current level or whether they will hike by 25 basis points on the next meeting on the 3rd of May. So as for today, early in the morning, we had Japanese bank lending year over year coming in weaker than expected at 3.0%. It was low impact news. We also had core machinery orders in Japan, which came in at negative 4.5%. This was better than expected, but still slightly not having much impact in the market. And also producer price index at 7.2%, which is a drop from 8.3% in the previous reading. Not much of activity. RBA or Reserve Bank of Australia, Deputy Governor Bullock also had a speech at 7:45 a.m. We didn't have much of a movement. And also we are looking at a tentative German 30-year bond auction. So all these have, but then the most anticipated news for the week will be the US inflation data, which is basically measured using what we call the CPI or the consumer price index. So whenever you're looking at the economic calendar, it's pretty simple. You'll have the date on the first column, then you'll have the time of the day, then the currency that is being affected by the news, and then a nice graph here indicating the level of expected impact. So statistically, we look at the news in the past and how they impacted the markets. So if there was zero or no impact, like in a bank holiday, you see this gray icon. Yellow basically indicates low impact news. Then we have orange, which is considered as medium impact news, whereas the red ones are the most important ones since they are considered to have the highest impact news. Then you have the description of the news you're expecting for that period. You have a detailed icon if you want to read more about that particular news item. And then there's 3 major outcomes. There's a previous reading of the news, there's what economists are forecasting, and also the actual data outcome. So we focus on the actual data and compare with the forecast as well as with the previous data to see whether there's an improvement or a drop in the readings. So mostly we use the forecast to compare with actual. If it's better than expected, then it's expected to have impact in the markets. And also you can visualize a graph of what happened during that particular news period. So let's get on with it. So for CPI, as you can see, in the previous reading, we had an increase of 0.4%. We expect this to slow down to 0.2%. So if you click on the graph here, you're able to visualize the readings in the previous months. As you can see, for the better part of last year, we had big increases in monthly inflation. But then we had a very nice drop in August, September, a small spike here, then a drop. Then we had a deflation movement, and this was in January before inflation spiked high in February and March. So now, as we look at the April reading, which basically reflects what happened in March, then we will be comparing with the previous month to see what kind of trend we're expecting. So for the yearly, inflation has been dropping. So if you click on this other graph, you can see that we had a peak in July where inflation was highest at 9.1%. And now for 8 consecutive months, US inflation has been dropping. So with the last reading being 6%. So we will be expecting a further drop to 5.1%. But then if there is an increase or inflation remains at around 6%, then that will be bad news because the Fed will have to go for another rate hike. And in that case, we'll be expecting a much stronger dollar. So if inflation drops to 5.1% or even below, then there's that potential that the Fed will hold rates steady at 5%, and that would be weakening for the dollar. Whereas stocks could rally with a drop that is higher than expected today. So we also be focusing on core CPI. It's basically the consumer price index without food and energy prices. So in this case, in the previous reading, there was a big spike of 0.5%. So if we happen to see another big spike, then this would be bad news again, where the Fed is expected to hike rates higher. That would strengthen the dollar and weaken equities. So we will be following closely on the 3 data points, the monthly change, the year-over-year change, as well as the core CPI change. So this is expected to cause volatility in all US dollar pairs. We will also be expecting to see higher volatility in gold as well as oil prices. So later on at 4 p.m., we'll be looking at a speech from Bank of England Governor Bailey. This is expected to have some impact in the markets. So as you can see, there is no previous estimate or outcome since it's a speech. Whenever you have a speech, then there is no data describing that data point. So besides that, we'll have a Bank of Canada monetary policy report. So it's a report, it's a document that's released on their website. So you just go through it, look at what they're projecting for the next quarter, what the current economic condition of Canada is, and what the Bank of Canada is looking to do. So with that, we could gather some insights, and they could cause some volatility in Canadian dollar pairs. Then BOC rate statement, similar with the policy report, but these now describes the interest rate decision and also the overnight rate. So in the previous 2 readings, the Bank of Canada has maintained interest rates at 4.5%. So in this case, we could be expecting the Bank of Canada to maintain the same policy and hold rates at 4.5%. So in this case, we had 4.5, this is 4.5. We are expecting that the Bank of Canada will continue holding rates there since they don't consider another rate hike as beneficial to the economy. So also consider the IMF meetings have been continuing for the last 3 days. Today, for the last 2 days, today will be the 3rd day, and the meetings will continue all week. So the G20 finance ministers and economists will be meeting today. So they'll be having a day 1 meeting. So G20 meetings are attended by finance ministers and central bankers from 20 industrial nations, including the G7 nations, Canada, Italy, France, Germany, Japan, UK, and the US. The meetings are closed to the press, but officials usually talk with reporters throughout the day, and a formal statement covering policy shifts and meeting objectives is released after the meetings have concluded. So we will be expecting to see some fireworks coming from these, as the finance ministers will be talking about monetary policy across their economies, as well as the impact of the Russia-Ukraine war, among other major events happening globally. So we'll be following on that closely too. Then we get to see the FOMC meeting minutes. So the meeting minutes are basically released 3 weeks after the federal funds rate is announced. So since the last meeting that we saw the Fed going for a 25 basis point hike, then the minutes of that meeting will be released today. So we get to see the final details of the discussions that happened from the FOMC members, and this has the potential to cause more volatility in the markets. So besides this, we'll be looking at the federal budget balance in the US. Then another speech by Bank of England Governor Bailey. This will be at 10:15 p.m. So as you can see, it's a very busy day, very action-packed. So expect a lot of volatility today. So if you're not ready for volatility, can stay off the markets. But if you enjoy trading a highly volatile market, then this is perhaps your day in the markets. So with that being said, let's look at the charts. We've had quite some good runs. First chart we are looking at here let's start with the FTSE or the UK 100 index, which has managed to break above after crossing the gap that we had on Tuesday. So the market opened with a gap, closed the gap, and then recovered, and today is running even higher. So would be expecting the FTSE to complete the entire leg and get to the upper trend line on the forward chart. Then for the pound USD, managed to break out of this flag, retest here, and then rally here. But then once it got to this resistance, 1.24460, happened to pull back down. So the idea is that the market keeps going up as the pound strengthens against the US dollar. However, as we approach the CPI report, if the inflation drops by a bigger number than expected, then we could be seeing the dollar weaken further, so the pound could rally all the way up. But then if there's a spike in US inflation, then the dollar could strengthen as investors bet on a stronger Fed rate hike. In that case, we could be seeing price dropping all the way back down and getting back into pattern. So a nice target would be 1.23414 towards the lower side. So same case for New Zealand USD, we expect a recovery and a retest of the previous high. So the previous breaking point of this channel, if I zoom out, you'll notice this channel that is seemingly triangular. So we could be seeing the market retest 0.62518, but then if the US dollar happens to strengthen as a result of the CPI news, then a spike back down to the support level. So the support level is at the base of the pattern here. So we can draw a horizontal line here and see it's 0.60827. So as for the Euro USD, we managed to predict yesterday that we would be seeing some recovery and a push towards the previous high. So the market pulled back down for a while, but has continued impressively. We got to the first target of 1.09276, and there's a good chance we could be seeing the Euro rally further to 1.09709. So moving on to USD CAD, we had a very nice bullish channel here. The market broke, retested the area, and kept going down as projected yesterday. And now some further drop today before the market pulled back up. And now if the US dollar weakens as a result of the news, then the target remains the same, 1.34113. But then this remains a key price level, the area that was retested here. So if we happen to see a dollar strength as a result of the news, then going back to 1.35086 might be an interesting decision. So as for USDN, it's trading at a major resistance level. This is a resistance that we last saw here. This was on the 3rd of April. We also saw the same resistance being tested around this area here. And this is the 16th of March. So now we have two potential target for USD JPY. One is a straight up rally to 135.27. And also, if the market was to pull back down, the short-term target is just around yesterday's low of around 132.89. But then if there's more momentum in the markets, then some further drop towards 131.84. So gold has been the most interesting asset to trade in the markets. Having formed a flag, broke towards the upper side, retested successfully. I remember highlighting this yesterday. After the retest, we projected it would go up, and it went straight up towards the 20.21 price level. So upon getting here, you can see in the last 3 hours, it has begun pulling back, and now it's looks like a sideways momentum before we get to the news in the afternoon. So 2002 remains a key support level. So as long as gold is pulling back as a result of a strong dollar, then this is a level to consider. But then the idea is that if gold happens to be very strong and the dollar is weakening, then the target is 2032, and a potential further target is the last year's high of 2069, 2070. So this is the last year's target. So we could be seeing gold breaking this high and moving higher. And the trend is seemingly very strong for gold. So the potential for reaching 2070 and breaking is reasonably high, but we could be seeing gold pulling back. So any form of weakness in the US dollar will get us some good opportunities to rally towards 2032. So from the technical pattern, it's very indicative that we are in an upwards leg. And for the upwards leg, the expected momentum is expected to hit the previous high of 2032. So that could be in the books. So it's just a matter of wait and see. So Australian dollar against the US dollar, we happen to see a very strong bounce from this support. So after the market broke this area, pulled back down, there's still that potential that we'll be seeing this happening again. The market going for this particular target around 0.671. But then if we happen to see a stronger dollar, then we are going back to support, and this is 0.6625. So it's just a matter of wait and see what the news outcome is and what the market is doing, and then we'll tell the direction. US 500 is still range bound, moving sideways, with the upper limit at 41.39, the lower limit at 40.69. So we'll be observing a breakout of either the upper or the lower band. US 30, similar case, but in this case, we already have a break happening yesterday in the evening, market retesting and pushing even higher. So the potential for a rally in the Dow Jones lies in the US deciding to maintain interest rates or even to cut interest rates. The only way that this would happen is if inflation was dropping at a much higher rate than expected. So any number below 5.1% could see a rally in the Dow Jones. However, if we see a very strong inflation, then going back down into the pattern might be the idea. So we'll be observing this bottom here around 33,289. US Tech 100 or the NASDAQ 100 index, range bound between 130.076 and 128.661 or 12,861. So a break below this will give us a direction. A break above this will give us a direction. So in between, I consider this to be a range bound, a market that is moving sideways. So I would be observing a breakout to the upper side or to the lower side. So Brent has been range bound for quite a while now. So yesterday we managed to observe that the market was headed to the lower band. If you traded within the range, then you probably benefited from the strong bounce. But from the price action that we have seen from the last couple of hours, there is little or no incentive to break higher. So potentially the market will remain within until we get the next set of news, which is the US CPI data. So the dollar index maintains bearish momentum from Monday evening. Tuesday kept going down, and today seems to be going down. So if we keep seeing this bearish momentum in the dollar, then the other ideas start to play out, especially things like Euro USD, which is expected to retest recent highs at 1.09709. So pound yen made some good rally here, making a recovery from that period when the yen was strengthening. So in this case, from here, it took a couple of days, 4 days to get back to the previous high. And now we are trading very close to the resistance level here. So there's a slight break, but seemingly from the price action I'm seeing here, we could be observing some form of reversal playing out. So after the market found resistance here, it has also found resistance again, and indications are showing that the buyers who bought the pullback are probably taking profit. So we could be seeing some form of pullback here, which could lead to an M-shaped formation, up, down, up, and then back down. So the price action is very tiring. There could be a potential position trading back downwards. So that's it for today. And thank you very much, guys. So let me see if there's any questions that I may have missed. Can I buy stop and sell stop the news to profit either way? That's a very risky endeavor. If you happen to see a whipsaw, then that's the risk that you're taking. Sometimes during news announcements, the market will whipsaw, meaning that it jumps all the way up and then back down and then back to the same position. Or at first it jumps down and then back up and then back to the same position. And that would lead you to get locked into two positions which are losing. So in that case, it can be very risky. But then if you are lucky and the market is unidirectional, just jumps in one direction, then you get to benefit from that. So the most important thing is to understand the risk that you're taking and not to over leverage yourself and blow your account. So, hi, how do I understand the card monetary policy? You would have to read the two policies. monetary policy statement, as well as the Bank of Canada rate statement that will be released later today. All you have to do is go to the economic calendar and then check on that. I'll show you this. Just go to BOC monetary report. Once it's released, click on the latest release and then go through the document here. So checking on the last question. Good morning. How do we measure the win rate in FX? Win rate is basically the number of wins versus the number of losses. So it's a ratio. You take the number of winning trades, divide that by the number of losing trades, and you have your win rate. So is it possible to download the video at the end? You don't have to download. The video is available on YouTube. All you have to do, go to YouTube, find the Market Snapshot series, and you can go through every other episode, including this one. So it's being recorded live, so it will be available anytime you want to see it. So thank you very much, guys. I hope to see you on the next session. Also remember, the newest episode of the Bullish Banter episode is up and live. It's available on YouTube, Spotify, Google, and Apple Podcasts, as well as TuneIn. So if you go to our social, especially Twitter, you'll find a link for that. Also on my personal Twitter, Rufas KE, you will find that link, and you'll be able to go to the episode. And in this episode, we basically take a deep dive, look at inflation, what it means, how it applies, and how it influences trading decisions. So thank you, guys. See you on the next one.